Hello friends, we will try to value a company Texmaco Infrastructure and Holding on the basis of its asset, and we will try to calculate the fair value of the stock on the basis of its asset. So here is the annual report, 2015 annual report of Texmaco Infra. We will go straight to balance sheet to check out the assets. So here is the balance sheet. The first thing we have to check while analyzing any company is the assets and liability, especially the working capital, which is just the difference of current assets and current liabilities. So the company has current liabilities of 397 lakhs, the figure is are in lakhs, and it has a current assets of 9507. So it has enough cash, enough assets to meet all the current liabilities, enough working capital, so company can easily meet all its liabilities. Next thing, we will go and check out the value of assets, and we will okay, the company has tangible assets of 13479. So this includes, I think, everything whatever it has, but not everything will be worth. So we will go and calculate what is important tangible assets. So let's go down, and another important number we need to know is the number of shares outstanding. The company has 127426, that is 12 crores 74 lakh shares outstanding. So let's take a note of this number. So just I am entering this 1274 lakhs. Then so here is the fixed asset section. So fixed asset includes land, building, plant, machinery, office equipment, furniture, vehicle, etc. But what actually matters and what actually gives the value to the company is the land and the building. Plant and machinery and vehicle, we can't actually know what is the actual value of that, so we will ignore all those things. We will just take rough numbers of land and buildings. So as on 31st March, the company has land and so just a minute. So we will add these two number 1973 and 606 to get the value. One nine seven three plus 606, that will give us 2579. So we will make an entry of 2579 in our Excel sheet. Next, so in the non-current investment section, we can see that the company has some good amount of shares of Texmaco Rail and Engineering. So it's a holding company, and the number of shares it has is 5 crore 46 lakh, and the value here shown is in terms of the face value, but the value in the market is different. So currently the stock price of Texmaco Rail and Infra is 108 rupees. So let's value it equal to 107. I think 107 is the value of the share, and then we will add this number 54650. So that's the value of the shares which the company is holding. It's let's make it into lakh. The figure will become 58422. So the value of the shares which company is holding is 58222. Company has some more investment, Lionel India Limited, and that is not a listed company. We don't know its share price, so let's ignore it for a while. And the company has lots of investments in mutual funds also. Lots of mutual funds are there, you can see this. And we will take their value, and the total value of all these investments is 5846. 5846 is the value of mutual funds the company is holding. 5846. Let's make an entry of it. So 5846 is the value of the mutual fund the company is holding. Now the company has cash of 196 lakh. So let's add the cash. 196 lakhs of cash, and then we will just total all this figure. So 67043 is the total value of all these assets which we have included. Now we will subtract the liabilities the company is having, because these are the things which company has to pay. So again we will go to the balance sheet and take out the liabilities figure. So current liability is of 397 lakh, and non-current liability is of 1520 lakh. So we will add both these liabilities, and we will find the total liability which is payable. 1520 plus 397, you will get 1917. So the liability is 1917. Now let's calculate the net value. What we will do, we will asset minus liabilities, we will do it. So equal to, this is asset minus liabilities, and we'll enter. So the net value which you are getting of this company is 65126. Now we will divide this number by the number of outstanding share, and we will get the value of this company on the office assets. So stock value will become equal to this number divided by this number, and we will get the value. So the value of the stock comes to 51 rupees. That's how we get the value of the company as 651 rupees. Now this stock is currently trading at a price of 30 rupees, so it's quite undervalued. So from this figure we can see the stock is quite undervalued. Because current stock price is 30 rupees. So why it's undervalued? Now we have to understand few important things. This 51 rupees value is coming mainly from the shares which company is holding. If the value of these shares goes down, the number 51 will also go down. So the maximum value this company is getting from the shares it is holding. The next important value giving thing is mutual fund holding. The mutual fund value is 5846. So this balance sheet was prepared on 31st March 2015, and now we are in 2016. We are in March 2016, and last time March 2015 stock market was at peak, and now it's down around 20% from that peak level. So most probably the value of the mutual funds will also be down. So let's reduce this value. Let's assume that it will be down by 20%. So let's multiply it 0.80. So you will get the 80% value, and that okay, so we have reduced this value and we get 4676. and by reducing by 20%, the figure has changed to 50 rupees. If we go little bit aggressive and we assume that the mutual funds value must be down by 25%, then what could happen? So the value changes to 49 rupees. The whole thing, the value this mutual funds and the cash, this is actually giving value to this company, and the stock price is currently 20 rupees down from the fair value which we have calculated from the assets. So this company looks quite undervalued, but we have to understand that this company is not making any profit, it's not doing any kind of business, it's just a holding company. So stock can remain at this undervalued level for a long time. When the company starts to capitalize these assets and all, that time the stock can go up, and the management knows those things. So that's why the promoter holding is very good in this company. 60% shares are being held by the promoters. So this was all about valuing a company based on its assets. Don't treat it as a investment advice, just do your own research. Thank you for watching this video. Bye bye.